We are getting some very good news on Tesla stock here today. Tesla stock is down 1.5% at the time of recording this video. This could be an opportunity to load up on some of that bullish positioning that maybe you did not have before today. Now, as one analyst says, Tesla stock could surge over $400 per share in the next couple of months. Ladies and gentlemen, let's dive straight into it. I don't want to waste your time, as I'm sure you don't want me to waste your time. Hit that like button and subscribe to the channel to stay up to date with all of this information on a day-to-day basis. So let's get into this video first things first with what Morgan Stanley is saying about Tesla. They actually reiterate their overweight position on Tesla, as now the Model 3 qualifies for the full $7,500 tax credit. Now, this happened over the weekend. They really got their supply chains in order to make this tax credit available to all of their vehicles. And essentially what it is electric vehicles, they can receive $3,700 if 50% of the value of their battery components were manufactured or assembled in North America. The remaining $3,700 is contingent on 40% of the value of critical materials being obtained from the US or another country with a free trade agreement. And as you guys know, a lot of the batteries Tesla has made were coming from their gigafactory in Shanghai. So it looks like they made some adjustments here, and now all of their Model 3s, every version, not just the performance version, can qualify for the $7,500 tax credit. But what Morgan Stanley actually said on Tesla today, they said, quote, Tesla is in the midst of an industry-wide EV price war, falling margins, and EV market deceleration. If the company wasn't benefiting from significant government incentives, IRA, the Inflation Reduction Act, and price cuts 30% on the Model Y year to date, Tesla could be burning cash. Yet, despite these headwinds, we remain overweight. Within our coverage, we see Tesla's best positioned to navigate the geopolitical and economic challenges inherent in rewriting the EV battery supply chain. More than AI play, we believe Tesla's role in building a de-risked EV supply chain is underappreciated by the market. And it goes on to talk about how until now the Fremont facility in California was receiving fully equipped LFP battery packs from Giga Shanghai for the Model 3, and it looks like Tesla have shifted production of those battery packs to the United States. It also looks like the new CEO of Twitter has started the job earlier. You were expecting her to start within the next 6 weeks, and it looks like she has already completed her first week at Twitter. And you would have thought this would have been a little bit more positive for Tesla stock, or at least talked about. You really have to search for this information to find it. And that was a big reason why markets dislike Tesla in 2022, is because Elon was spending too much time at Twitter. And now it looks like that's not going to be so much of a cause for concern. So I do still think this is a bullish catalyst. I think it is currently in play in Tesla stock, and going to give you a little bit more support for the company, because you don't have that overarching thesis that maybe Elon is not focused on Tesla anymore. He's focused too much on Twitter. Now, this article from The Street says that short sellers are in a lot of trouble here. Tesla stock has doubled since mid-February, and there could be more pain to come. And after all, there is $21.5 billion in short positions currently on Tesla stock. And you're probably going to get some form of a short squeeze if Tesla continues higher from here. Now, Tesla stock did just recover a key level, in which we'll talk about once we get to the technicals. I'm sure you guys know what it is, and I'll tell you. It's the 200-day moving average. This is by far the most important moving average, and it shows you long-term sentiment in a particular stock. And Tesla played the 200-day moving average perfectly, supporting some more upside. Now, according to data from the NASDAQ, 95 million shares were held short in mid-May. This number really largely unchanged from the lows that we had seen as well, suggesting that shorts really haven't even started covering on their short positions in actual numbers here, right? In sizable numbers. There's a lot of work to do there, and we'll look at that on the Ortex platform. Now, what's next for Tesla shares? This is the analyst that says Tesla could reach $443 soon. That would be its new all-time high. Now, it says it's bullish that the company's share price is above the 200-day moving average, but it's still trading sideways. And they go on to say that they can argue a few lines of resistance, including a nice round target of 250. And 250 is really my shorter term price target, my next month or two price target. And then I go out to the $300 price target within the same time frame. 250, I think you break 300 pretty quickly after that, in my personal opinion. But Bruce Kamek, who has been analyzing price charts for nearly 50 years, calculated a $245 price target for Tesla using daily point and figure charts. He said a close above 208 in April could put a long-term point and figure chart target of 443 in play. That's a big move. But he goes on to say, of course, we'll likely see that long-term, we will unlikely see that long-term price target anytime soon within the next couple of months, because stocks don't go up or down in a straight line, saying that we really need to get to that 250 level before we can expect some material upside from there. And I think that's pretty well common sense. You got to get to 250 first before you talk 300 or 400. But that's certainly in the cards, especially if Elon really does have Tesla's Chat GPT moment by the end of 2023. Now, if we do go ahead and take a look at the amount that is currently sold short in Tesla stock, it has been increasing dramatically. Now you're sitting at $22.35 billion with about 4% of the float, which is currently sold short. Now, the free float that is sold short, the percentage really doesn't matter in regards to Tesla. It's all about the dollar amount sold short. And almost $22.5 billion is up $1 billion in just the last day or two. Shorts are losing a lot of money, and the higher this thing goes, the more money that they are going to lose. This is, in fact, the highest amount of short seller losses in the last 12 months. You are crushing shorts right now. It's, terrible to be short on Tesla. And the sorry thing is, for those shorts, Tesla stock's probably going to go a lot higher from here. Now, let's analyze some of the option activity here today. So today, you're seeing 226 orders on Tesla worth about $86 million, positive order value of 64%. A lot of hedge funds, institutions targeting some of those 215 strikes, a couple of the 260 strikes for July, some of the 245 October strikes, 240 July strikes, 250 July 21st strikes. So you are getting some pretty bullish positioning just in the next month or so. A lot of firms are expecting Tesla to be $260 per share. That would be a problem for shorts. Now, I know we're all in this for a longer term trade, right? This is an investment for us. But in the short term, you can get an upside move from shorts covering on short positions, in which I'll reiterate, like I said earlier, it looks like shorts have not covered on their short positions at all. Really, they're losing more money now than they have in the last 12 months. That's putting a lot of pressure on them. Now, if we look at some of the option flows today, you are seeing a total call volume of 224,000, a total put volume of 141.65 thousand, and a lot of people are trying to get in these calls pretty quickly at the ask or above, meaning that they're just willing to get into these trades. Out of the 224,000 for call volume, 107,000 was at the ask or above. The bid or below was 75,000. So you are getting, and now the ask or above just updated to 208,000. The total call volume of 441.66 thousand. Total put volume of 265,000 as Tesla stock now just went green. Look at that. Tesla's green on the day. And if you hold this into the close of the day today, what you're going to notice here on the charts, this is a hammer candlestick. It literally looks like a hammer, right? You get this low wick down here signaling a low, and that buyers stepped in to buy the stock. That usually signals that the selling pressure got exhausted in the stock, and it usually signals an upside move to come. Last time we got a hammer candlestick of importance was back here on May 24th when Tesla stock was trading around 185. And look what happened ever since. So that's a very good technical indicator. Now, the biggest technical indicator is that 200-day moving average. Now, if you in theory were to initiate a long position right now, your downside from here is going to be that 200-day moving average. That's going to be the level of support that Tesla stock would bounce at. Okay, or should bounce at, unless we got really bad news or something. As you can see right here, the 200-day moving average, it held perfectly as support these 3 days right here, May 30th, May 31st, and the next following week on June 1st, and it has been off to the races ever since. And typically when Tesla does break out past its 200-day moving average, you can get some very aggressive rallies, right? This rally back here, where Tesla did break its 200-day moving average on the upside, you've seen a rally of about 36%. I mean, if you go back to 2020 and 2021 times, I mean, you're going to find it had a larger rally. It came down, touched support, this 200-day moving average, and it was off to the races. This rally is just really insane that they've seen this last first time around. So I don't know if you really want to compare it to that. That was a rally of 1,000%. Maybe I'm not going to forecast that right now, but long story short, very important level that Tesla is holding, and it's going to mean some more upside from here, as long as the markets don't completely fall apart. And Citi says a stock sell-off in the tech sector could soon arrive for the markets. And exactly what they go on to say is this: investors have been strongly overweight U.S. stocks versus all other regions, even cutting some bullish momentum from Japanese equities. Quote, positioning is the most extreme in NASDAQ futures, where investors are sitting on very extended profits. This could lead to rounds of profit taking in the near term, he told clients in a note on Monday. He explained that investors extended net long positions or bets that prices will rise in both S&P 500 and NASDAQ futures in the later half of May. Quote, this bullishness was driven by large cap growth and caused the NASDAQ to become more extended than the S&P, they said. And if you look at the charts here, I mean, it's pretty easy to see. You really haven't seen shorts covering by any degree. You really haven't seen anything but long positions on especially the NASDAQ. He says, not only is the NASDAQ positioning the most extended ever seen by the model going back more than 12 years, but profit on these long positions averaged 7.6%, which is a level where the profitability of rounds of profit taking increases significantly. The average profit for S&P long positions is small by comparison at just 2.7%, said the Citi team. So there is a lot of profits in the NASDAQ. There could be some profit taking, but we really don't have that big catalyst yet. We really don't have that huge reason to dump stocks. Yes, you're getting contractionary data. The services data that came out yesterday, very bad news for the economy, but it was good for inflation. Looks like service inflation might fall. And that was something the markets wanted to see. So what'd that do? It sent stocks up higher. Now, I'll tell you guys, the only reason the markets care about what the Fed is doing or what the Fed did in 2022, the whole reason you sold off in the markets was because the Fed raising rates leads to a recession. The ultimate fear is a recession. So if you start to get very recessionary data, if you start to see consumers pulling back even more, if you start to see these negative signs for the economy, that's what the markets are going to pay attention to. It will switch from the Fed being the main focus to a recession being the main focus, guys. So that's going to do it here for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comments section. If you want to stay up to date with all of this information, hit that notification bell as well. You guys enjoy the rest of your day, and I will see you in the next one.